Hello, founders and investors. Welcome back to Next Round Ready. I'm your host, Chris. Today we have special guests, special. I've been trying to get this guy on the show for months. Itamar from Recursive Ventures. Welcome to the show.
Chris, thanks for having me. So excited to be here. And thanks for all the audience out there that's listening to us. Excited to be here today.
So I'm always interested. I ask this question to every investor, and it's always different, which is why it's my favorite question. How did you get to this point of being an investor?
Yeah, I guess, mostly I was lucky. No, just kidding. I've been doing this for a while. Okay, so my entire career has always been in startups. Like as early as 2000, 2001, like right before the internet bubble burst, I was already running my first company. Quite poorly at that, actually. I had to lay off all 7 people I had back in the day because my only customer called me up and said, hey, we just don't want to pay you anymore. And I had to shut down my company and realized that I don't know a lot about startups. But ever since, I have been working and investing in startups. So for 25 years, and I'm a serial entrepreneur and startup executive. My last company is a company called Life360, which is a public company, Nasdaq traded, over $5 billion market cap. Before that, I was a very early employee at a company called Gigia that ended up getting sold to SAP for $350 million. So I've done a lot of company building. Then, as early as 2010, because I always wanted to support founders as well, I started with my venture career. I worked on Sand Hill Road doing institutional Series A, Series B VC at a firm called Morgan Stanley Ventures, and started really angel investing from there and eventually institutionalizing Recursive Ventures, which is the fund I run now. So I've been investing for 15 years, and I've been very fortunate to invest in 2 decacorns and another 6 unicorns. So $8 billion plus companies at the pre-seed or seed stage over the last 15 years. So that's how I got
incredible. Incredible. And you know what's funny? My sister actually, she set up a Life360 account for our family, like I want to say a month ago. So that's not a couple months now. I've been using that app for a couple months now. So that's funny. It's always crazy to talk to people who had a hand in building these apps and these platforms that you actually use in real life. I don't know. It's so surreal, to have that reminder that people actually built these things. They don't just come out of thin air. Like people have hands in this, Yeah,
Life360 was such an incredible journey, man. It's now with over 50 million monthly active users in the US. 1 out of 5 US phones have this thing installed and running. And it's also a life-saving app because we built this crash detection and response feature where if you or your loved ones is in a crash, we know exactly the severity of the crash. We know when it happened, where it happened. And we try to call you up. And if you don't pick up the phone, then we send an ambulance your way. And literally this thing is saving lives every single week. So, a great business, but also has a mission and a purpose.
Yeah. And I want to ask you about that part. Like when you're building these companies, when you were in that building stage, and even as an investor now, what's the bigger reason behind it? I find that the best investors always have a reason outside of making money. Like everybody wants to make money. That's kind of the layup. But what's the thing behind that that's like, this is why I get up in the morning and why I do this?
Yeah, so my real passion is about supporting entrepreneurs. I love doing that. I'm a bit of a fixer. I like being the guy that gets the call when, S hits the fan and things are not going well and really try to, turn around, help the founders through, all these kind of early stages of setting up a company and taking it off the ground, getting from 0 to 1. That's really my passion. That's why I love doing this. Obviously, I'm also working for both my LPs, my limited partners that invest in my fund, and my founders. They're both customers in my world. So it's really important for me to do a great job. And for the LPs, that means making money. So yes, we are in the business of making money. That's what we're expected to do. But at the same time, we're trying to do it in a way that is sustainable for the founders, sustainable for the companies and the employees that they employ, and just, build something great, that helps people. And if, look, we're not a nonprofit, we're not a double bottom line fund. We're here to make money, but we'd rather do good while we're making money.
That makes sense. And I like that you mentioned the LP side because I'm always trying to just let founders know that you're talking to an investor. But they don't just, if they're not an angel investor, they have people to answer to, right? They just go out here and making any kind of decision. So for you, you said you had a stage of being an angel investor, and then you started the fund. What kind of made you go from being the angel to actually wanting to have your own fund?
The opportunity to make a bigger impact with bigger checks into the founders, like in companies I was already backing. So when I was an angel, I was writing, 25K checks, $10,000 checks, because obviously how much of my money can I, use to deploy. But now that I'm writing checks, $500,000 to $1 million at inception, getting our companies off the ground, having all that external capital enables me to do that. I couldn't do that as an angel. And that's why I decided to, and look, I take it very, very seriously. It's managing other people's money, managing pension money, manage money that, inheritance. I take it very seriously. It's weight on my shoulders. I'm a fiduciary of that capital. But I think for me, it's a good fit because I know I can make those LPs money and I know I can leverage that capital to help founders really get off the ground.
I love that. I love that you're still so focused on helping the founders after having your own success. So let's talk a little bit about the founders. Since you love helping founders so much, I would love to know like the kind of founders you love to look for that you are excited to work with.
Yeah, absolutely. So look, at the stage that I invest, pre-seed, you don't often get much more than, two founders in a garage and a dog and like a business plan, right?
Yeah.
Which means that really a lot of what we're banking on is the people, right? And we've gotten extremely good, I hope, at Recursive Ventures at evaluating if we are backing the right folks or not. So we systematically try to understand a bunch of different things about the founding team. Stuff like resilience, subject matter expertise, working dynamics, right? Do they have a healthy relationship within the founding, partnership? And backability. Are they going to be able to raise more money? Are they going to be able to sell, right? Effectively if they're doing B2B. And we're really trying to honestly challenge founders and systematically figure out if they are the right people. What I've found over the years, and this is pretty hard, is that the founders that can go all the way from like coding at night, just delivering this feature to the customer, to being the CEO of a publicly traded company. The people that can do that, they have a few characteristics in common, which I look for. Things like intellectual curiosity, right? They always want to learn more. Student always attitude. They know that they don't know everything, and they bring on the best people, the best mentors to help them work through those new challenges, right? So intellectual curiosity is really important. Intellectual honesty is another important aspect here because, you want to make decisions based on data. Yeah, you can use intuition, but if kind of you're lying to yourself that something is working while it's not working instead of pivoting, then that's a problem. So you got to be honest about what's working, what's not, and part of that is also often putting your ego aside. Because when you make ego-driven decisions in startups, they're not calculated, they're not right. You're putting more risk on an already pretty risky situation, which is an early stage startup, right? So that's sort of another aspect that is important for us, less ego, more listening, more, just be in this mindset of how do I learn, how do I evolve? In a way, when you think about the entrepreneurial journey that entrepreneurs have to go through, it's basically a journey inside their brains of how do I get from where I am today to the end state of knowing exactly who my customers are, exactly what I'm selling to them. How do I talk about it? How do I talk about this with investors? How do I maximize the opportunity out of this thing? And if in a magical way we could inject all that knowledge into the founders today, leap ahead, they would be successful, right? So really that journey, that entrepreneurial journey is all about that learning curve, that cycle where you learn. And the faster you get there, the better off your company would do. So you need to be open-minded. You need to be open to mentoring. You need to be thoughtful about what you know and what you don't know, and then seek answers.
What's always interesting to me is the confidence and the resilience aspect of a good founder, because I'm trying to always understand the difference. I feel like there's a fine line between being a confident, a great founder, and you have the domain expertise, and then having that coachability and being able to listen to mentors and accept feedback. There's like a fine line between I know this because I've done it for a decade and okay, I'm going to listen to your feedback because you're an investor. You know what I mean? I find that that's probably one of the hardest things for founders to kind of adjust to when they're entering the venture capital space.
I'd say the trick is, and there's probably more than one way to skin the cat, but the trick is be overconfident about your vision of how the world is going to look a decade or two from now with your disruptive technology, that selling that vision, being overconfident about your view of the world eventually where it gets there, I think that's a very important aspect that founders need to embody. But that's very, very different than saying, I know what it takes to get there. What it takes to get there, this company building, the operationalization of this thing, the journey that you have to make until you get to that ultimate vision that you have, that's where you should be humble. That's where you should seek help. That's where you should hire the best people for the job that know how to do that job better than you, and that's how you win. So that's kind of the distinction that I make on where you should be overconfident as a founder, and where you should check your ego and let other people win together with you.
That makes sense, because essentially what you're saying is humility. You have to know when to place it and when to pick it up, essentially, because not every aspect of the capital raising process or building a unicorn company, you can't be humble the entire time, but there are times where you have to be if you want to really thrive and get to that next level. And so I would love to hear a good example of a founder you've worked with who has like that perfect balance, of having that humility, but is also still super confident.
Yeah, I think probably an easy one for me would be to highlight my boss and partner to our Life 360 journey, Chris Holes, who's, an amazing, amazing person, probably the smartest person I've ever met. And Chris Holes is, at the same time, he's been running what is now a public company for the last 24 quarters, but he's been running the company for 19 years. And it's his first job. It is his first job out of college, and he built a $5 billion public company straight out of college. Took him 19 years, but that's what he did. And one thing that's incredible about Chris is that he exactly embodies the kind of, he is overconfident at times about that product vision. About everybody wants to be connected with location. Safety, peace of mind is always one of the most important aspects for families. Family communication is a different type of social network. It's not like Facebook. It's not like LinkedIn. It's something different. It's about the day-to-day. He really nailed all the core pillars of what this new type of communication, social networking within the family looks like. Always, out the 19 years that he was running the company, and he's still running the company, he emphasized those principles in all the product development that we did. But at the same time, he's the guy that would call 10 people about anything operational. How do we do sales? How we do this? Pricing, this, that. He's like, I don't know, but I'll be a judge of 10 different advice that I get. We'll work through all of them. We'll keep our eyes and ears open to any feedback. And based on that, we'll make the best decision. He really embodies a lot of what I believe entrepreneurs should be, kind of the state of mind that they should be in.
Oh, I like that. I like it. So let me hear some red flags in founders. What are some of the things when you see or hear this in a founder, you immediately run the other way? And this is like the hot take session of the show where it's like, let's be brutally honest,
Wow. So many. Actually, a lot of this job is being really good at saying no fast based on early indications, red flags. This is probably the most important thing you need to do as an investor, is to be able to say no quickly and kind of filter out deals, because most VCs are bombarded by deals, right? And we have to focus on the ones that we think can move the needle most. So here are a couple that give me pause. For confidence and hyping out too much your near-term goals, right? Like if you're overselling, and I feel that you're overselling, and the more I dig in, the more I see, like I expose that there's pieces that don't 100% align with reality, the more anxious I get. Because I think the people that are most successful in getting feedback, they know how to talk about their weaknesses, and they know how to talk about the challenges in the business, right? So for example, if I ask a founder, what keeps you up at night? And the answer is nothing. I'm like, seriously?
Yeah. Wow. I get it. Well, that's a red flag. That makes sense, because it just says that either you're not telling the truth or you don't know. And I don't even know which one is worse at that point. Like, you didn't do the time. You take the time to learn. You got to learn where your weaknesses are, what you're not good at, where you can fail. And I get it. That makes sense.
The other thing that's a red flag for me, and that's more in the founding team, is I really try to understand if we got all the right DNA in place for this company. And if we don't, and one of the founders, for example, claims that, oh, I can do sales here, and like, oh, wait, but you're not actually a salesperson. Like, yeah, I don't have a sales experience, and you don't come across as somebody who can close customers. That gives me pause. So I think really good founders understand where their, like, what their weak spots are, and then they complement that with other founders, right? So, for example, when I come across a single founder who is great technically, but they're not really good into sales, I'm like, yeah, I tell them, have you thought about, partnering with somebody? If they're like, no, I want to run this by myself, blah, blah, that is a red signal for sure. I would say another big red signal for me, and maybe that would be the last one, we can always talk about more, but is I come across this often with founders that don't understand that their company is actually not a good fit for venture capital. This is a very common mistake that founders do, where they just rush into taking VC's money. And the reality is, for the vast majority of companies that are being started today, VC money does not make sense because they're not a scalable startup that would have a multi-billion-dollar valuation. And what happens if you take a check from people like me, from VCs, and you're not actually on the trajectory to build a multi-billion-dollar company, what's going to happen is we're going to be misaligned eventually, right? So you shouldn't be taking that VC money to begin with. Go get angel money, go get family office money, go build your company organically, make profits and push those profits into investing in the business and take it off the ground that way. And when I see founders that don't fully embrace or understand that logic, and they're sort of like looking for a shortcut by taking VC money to kind of plug the hole that they have now in their financials, I'm like, wait, this is a red flag because you shouldn't be partnering with me. So why are you pitching me this thing? Right?
That's a really good breakdown. And to go back to your second red flag, kind of how I compare that, like the leadership aspect of plugging the holes in your business as a ship example, is you as a founder kind of have to be like a head coach of a football team. Like if you're a head coach, you're going to hire a offensive coordinator who, is great at offense, who might not be as good at, you're not as good at offense. So you hire a good offensive coordinator. On defense, you hire a good DC who's going to handle that side of the ball. And I think that creates that kind of balance and really puts you in that CEO role. Some really good flags, by the way. I appreciate that insight there. So I would love to hear, and this is a question you don't have to answer, but I have to ask every investor because the founders love it. Are there any companies that you passed on that you regret?
Wow, so many.
Really?
Passed on ways back in the day because I did not believe that they would be valuable without significant monetization and having a business model, which we didn't have back then. I did not understand the value and power of data, which is why Google came in and purchased them for $1 billion. I passed on Carta.
Really
had an early look into Carta, and I was like, wait, this is just a cap table management software. How does this get big? I missed the fact that potentially every startup would pay them and every law firm would use them. And then they would also build a VC business and a secondary business on the back of that, right? Because they became the system of record for all ownership in startups. And they did not see the potential that could, stem out of that. So, yeah, so I passed on Carta. I mean, look, the list goes on and on. I passed on Lyft, the firm I was at.
Oh, really?
Yeah, Morgan Terra Ventures, we saw Lyft. We're like, wait, what? Black car? Like all this stuff. It was like, what, you're going to disrupt cabs with like individuals running around with cars? Like, it didn't make sense.
It did sound crazy. It sounded crazy when it first came out. It did sound crazy.
Yeah. So my firm, I shouldn't say me, as collectively my firm missed on Lyft. Yeah, and the list goes on and on, but here are a few examples for you.
So how do you deal with that? Because I don't know, like the mental aspect as an investor, I'm always interested in that, like how you miss out on billion-dollar opportunities, but you still get up and hear more pitches and talk to more founders, and then you still don't say yes to everything. Because I think for the average person, it would be hard to say no after missing out on such massive companies over and over again. It's like I wouldn't be inclined to say yes more, right? Because I missed out so many times.
Yeah, but I can. So let's look at the stats. I'm honestly sourcing deals is not something that is a challenge for me. I get over 1,000 qualified deals a year. And qualified means it's a deal that comes from somebody I know and respect. And it's either them or somebody that they know and respect. So it's a warm introductions through a vetted, middle person. 1. 2 is it's a pre-seed opportunity. 3, it's in AI because that's my area of focus, AI, data, and AI. So I get over 1,000 validated, qualified opportunities like that a year. And I do 10, 12 investments a year. Statistically, I do 1%, 1 to 2% of the deals that I see, and I can't do more. And those are all great deals. And I turn them down again and again and again. So going back to the anti-portfolio, which is all the ones that I've missed, first of all, I know it's part of this business, and I'm not even concerned about that. Instead, I use it as a learning opportunity. And what I do is I look back at all of those missed opportunities when it's clear that I missed the boat and it's a winner. I look back at all of these and I try to analyze if I had a mistake in the process, in the decision making, what could I have done differently? And if the result is I've done everything I should have done as part of my process, but I made the no decision based on all the right data points, I don't think about it twice. I don't feel regret. I'm like, I would do the same thing again. But if instead I figured that, oh wow, I should have made this extra call. Oh wow, I missed on this. I should have asked. I should have known, like all that stuff. Then I try to learn from it, improve, and embed that into my next set of opportunities.
Well, I love that mindset. Man, that is so healthy because I see why now you don't get stuck on that one miss when you have to worry about your other makes. And it for you, obviously, I think it's easy to say, well, I got that one at $1 billion IPO and I got that unicorn and I got that decacorn. So like you have an insane track record of wins as well to kind of prove to yourself when you look in the mirror, like, I'm really good at this, And is that something you think about? Going back to the beginning of our conversation when you're like, I want to help the founders and I want to give back. I want to have more of an impact. How often do you think about that? Like, how often does that really cross your mind?
All the time. So I think I do feel confident about what I'm doing today. Took me 15 years to get there. So this takes a decade to train a VC. Also because you don't really see how effective you were until the companies scale up and become successful. So you make a bet today, but the outcome is going to happen 10 years from now. It takes a lot of time to have that feedback loop actually give you feedback. So today I feel like, 15 years in, yes, I know what I'm doing. I can make this work. I can make money in this business. The characteristics of the business is that this is one of the most coveted, jobs in the world. My competition is insane. Amazing, smart people. So many people that are honestly much smarter than me. And are working their asses off. I mean, I work 12 hours a day. I have people that I know that I work with work 15 hours a day, like every waking hour, and they like text me at midnight. I'm like, what? That it's a very competitive business that a lot of people want to partake in. So I think that makes it hard. But hey, I'm up for the challenge.
I love it, man. This was a really insightful conversation, even for me. I appreciate you being here. What's one last piece of advice you would give to the founder who is in that pre-seed stage right now, just getting things started?
Well, I think I'll just say something obvious but important. If you want to get in touch with me, if you want to, in general, with pre-seed funds, we're institutional money at this point. Like I run an institutional pre-seed fund. We we have like a full process in place and so on and so forth. So what I would recommend is always try to get a warm introduction. I have a lot of founders calling me, guys, it doesn't work. Find somebody that knows me and knows you and can vouch for you and have them ping me. And then I'll be able to give you my full bandwidth, figure out if this is a good fit, if I can be helpful to you, all that stuff. The cold calling doesn't work. Go build your network of advisors, angel investors, other VCs, folks that can help you on that journey. It takes time, but it's a good investment. And then reach out, get warm introductions. That's really the only effective and repeatable way to get funded.
Yes, man. I'm telling founders this. I promise you, I just recorded a video before this about that. Why it's so important, because if you reach out to, because now there's this thing, I don't know if you've seen it, where it's a bunch of databases out there with investor names, emails, LinkedIn profiles, and then founders go and get them, and then they do like AI matching. And then you could just spam the investors. And I'm like, this is pointless because they're not going to answer.
My LinkedIn has 20 to 30 of these a day. I don't even read them.
So you don't even go through and read the short ones that are like 2 or 3 lines.
How can I, if I get 4 deals a day from people that I know and trust and tell me this is awesome? Or actually, I have 2 venture partners. Between the three of us, we've done over 600 deals in 25 years. We've backed over 1,200 entrepreneurs. And just think about what happens when you have 1,200 entrepreneurs you've already backed. How many of them start a new company just this year? So like,
Oh man.
I'm bombarded by people who I know, and are like, these people are awesome, and now they're starting their next company, and that doesn't even leave me time to read a cold email. So without a warm introduction, I wish I could reply to everybody, but I'm already working 12 hours a day. So what can I do?
Man, I understand it, man. Well, I appreciate you taking the time out of that schedule to be here on the show with us, man. This was
Yeah.
really, really good. I'll make sure I can't put your LinkedIn in the description like I usually do because I don't want more people spamming you.
No, please do. That's the one thing that I do. I have a lot of content that I write on LinkedIn when it comes to helping founders deal with VCs, fundraising, all sort of startup anti-patterns, things that you shouldn't do in your startup that can, ruin your company. That would be my only call out here is like, follow me on LinkedIn. Feel free to push my LinkedIn URL in there. And all I'm saying is, I think my content can help you as a founder. But if you want to get a hold of me to kind of show me your pitch and all that stuff, just find a way to get a warm introduction.
All right, man. Sounds good.